we need to see what is the gross profit. Okay, so realizable value, so we will take uh, so opening stock, that is opening stock plus purchases plus wages. Wages is how much? 46,500 plus fuel. Okay, minus closing stock. Minus closing stock is how much? 25,000. So how much is coming? Sales also there. Gross profit. Let's see. Or we will take, this is the cost of goods sold. 69, 46,500 and 15,000. Okay. So 17,000 plus 52,000.
130,500.
130,500. Thank you. And sales, this is COGS. COGS. Okay. Minus closing stock you will take if you want. Minus 25,000. So we will have 1,05,000. Correct? 130,500. 130,500 is 1,05,500. 1,05,500.
5,500.
500. Okay. Sales is how much? 1,45,000. Okay. So gross profit is equal to sales minus cost of goods sold. That is 1,45,000 minus 1,05,500. So what is the answer? 39,500.
Yes, sir.
Okay, so this is the answer. Okay, can I erase this? Okay. So can you just try this? What is the closing data? So some doubts. Sir, please show it back. Okay.
Sir, and the question net realizable valueங்கிறது என்னது சார்?
So net realizable value means இப்போ ஒரு மிஷினரி இருக்கு, சேல் பண்றோம், அந்த சேல் வேல்யூ எடுத்துக்கிறோம். அதான் net realizable value. That data we should not consider. That is additional
Okay.
information. So
Okay,
this information is additional. இது எடுக்கக்கூடாது. So what we need not to எடுக்கக்கூடாது.
Okay, sir.
Okay.
Okay, sir.
Okay. So can you try this question? Opening debtor 3,000, credit sales 83,000, cash received from debtor is, debtor means a person who has to pay money to the company. That means credit sales, the money has not come. So we will have 80,000, that is the credit sales. Opening how much? 3,000 plus 80,000 So total receivable is 83,000. Okay. Total receivable. Receivable means we are supposed to receive on that 83,000. How much we have received? 60,000 we have received. So balance how much? 23,000 we have. Okay. So that is answer. Okay. All of you clear? Okay. So the answer is 23,000. You see? 83 minus 60, 23,000. Can you try this question? A person started with the business 50,000 and he take a loan from relative 5,000, profit for the year 10,000, drawing 9,000. What is this closing capital? This is, comes under business balance sheet equation. Very simple, very important. 2 mark question. Huh? 2 mark question. Okay, please solve this. Yes, a person started with 50,000. He has taken a loan from relative 5,000. So total 55,000. Profit
Yes.
is 10,000. 65,000
65,000.
minus drawing. 65.
56,000. Answer.
Answer is
56.
56,000. So answer is 56,000. Correct? So you job. Okay. Clear on this? Okay. Somebody has got doubt. No doubt. Okay. Okay. Can you try this question? Cost of goods sold 15 lakhs. Gross profit is 20% on sales. 20% on sales means 25% on cost. Okay, so that you need to remember. All right, 20% on sales is equal to 25% on cost. So here 25% of cost of goods sold, how much? 15 lakhs. How much is here? What is the value? No value, huh?
3,75,000, sir.
So 3 lakh.
75.
So this is profit. Okay, gross profit. GP. Okay, GP is equal to, this is what it is. So GP we can calculate. So this denotes GP, right? Sales is equal to cost plus profit. Cost plus profit. That is 15 lakhs plus 3.75 lakhs. Total 18.75 lakhs. Okay. So this is the answer. Somebody has got a doubt. Oh, super. 3,75,000. Good. Good going. Very good. Right? Ah, it's clear. Okay. Is that okay?
Yes, sir.
Okay. So next question. Can you try this question? Opening balance of debtor is 35,000. Cash received from debtor is 30,000. Then cash sales is 20,000. So which is 20% of total sales. So we need to calculate credit sales bill received. All right. 40,000 discount allowed, 1% of cash is collected. Find out the closing debtor. Hmm. So opening cash received from debtor 5,000 is there. So credit sales, this is 20% of X. Okay. So that we need to do. Hmm. Okay. Bill receivable is 40,000. Bill receivable is 40,000. Okay. Right. Can we do that? How to do that? Now opening debtor. How much? 35 minus cash received is 30,000 plus credit sales. Credit sales is how much? 20% of excesses of X is equal to how much? 20,000. Right? 20% is cash sales. So credit sales is equal to 20,000 into 100 divided by 20. How much? Total, not credit sales. Total sales. So total sales is equal to 1 lakh. So now credit sales is equal to 1 lakh minus 20,000 of cash sales. That will give us 80,000. So here I will be adding 80,000 credit sales. So 35,000 opening balance minus 30,000 cash received and then credit sales plus 40,000 bill receivable on that discount allowed 1% cash collected. So 85 okay. So 35,000 opening debtor, on that 30,000 is we have cash received, so the balance is 5,000 plus additional credit sales is 80,000, so 85,000 minus 40,000, so 45,000 minus discount allowed 300, so balance is 44,700 is answer. All of you clear? So what I'll say is 35,000 is opening balance, 30,000 cash received, and credit sales of 80,000, right? Minus bill received minus discount allowed that we need not required to collect. So the answer is 4400, 44,700. Okay, please copy this. Okay, so we'll move on. Okay, can you try this? Right. What is the amount received from debtor? They were asking what is the amount received from debtor. Opening balance of cash is there 4,000 and closing balance is 7,000. Payment to creditor 80,000. Bill payable matured is 6,000. Bill receivable discount is 9,000. Sundry expenses 3,000. Drawing 12,000. So they were asking, right? You see, all the payments, this side is payment. Okay. This side is receipts. Debit side is receipts. This is opening balance. Bill receivable discounted, again cash received. So this is a balancing figure. All right. Here now, this is a payment. This is a payment. Bill payable matured is payment. Sundry expenses cash outflow. Drawing is cash outflow. Closing is there. So total of this and subtract this, you will get this value. Okay. So understand, all the payments are in one side, all the receipts are in another side. The difference is amount received from data. So drawing means the proprietor uses their fund. Bill payable matured, that means we are supposed to pay on particular date. We are paying payment to creditor. We have paid for all credit purchases. So that is what is mentioned here. Okay. Next question. So this is simple. 25% on sales is equal to what percentage on cost? 33%. So this is the answer. Okay. Simple. Okay. So can you try this? Easy one. Okay. Please show me that 17th question solution. Okay. Right. Right. Okay, thank you. So we'll move on. So 18th we have done, 19th we are going to do. Sales is 3 lakhs, gross profit is 20% on sales, purchase is 2 lakh 40,000, opening stock is 20%, 20,000. What is the closing stock? Right? Purchases plus gross profit minus sales, 20% on sales. So gross profit. So we will see gross profit now. Gross profit is equal to 20% on sales. So that is 3 lakhs is equal to 60,000. Purchases 2 lakh 40,000, right? So closing stock is equal to opening. We'll take like this: sales minus opening stock minus purchases. Okay, minus GP. Sales is how much? 3 lakhs. Okay, minus opening stock. What is opening stock? Opening stock is 20,000. Okay, minus purchases 2 lakh 40,000. Minus gross profit. Sales you have taken. Purchase you have taken. Closing stock we need now. Opening stock. Sales plus closing stock. Okay. Okay. So sales we have. Sales minus purchases, gross profit 60,000. Okay. That we have taken. Gross profit is there. We have opening stock is what? 20,000. Closing stock we need to know. Closing sales plus closing stock minus opening stock minus purchases, gross profit. Okay. So sales plus. Okay. So the answer could be why it is not coming. Once again. Right. We have opening stock plus purchases, gross profit. Correct. So 3 lakh 20 minus 3 lakhs. Okay, correct. So, or we will take like this. This is opening stock, purchases, gross profit is, we are calculated like this, 20% on sales, and then sales is given. So this is a balancing figure. This is a balancing figure. Okay. Okay. So can you just do this net profit before following adjustment? 1,80,000, outstanding salary 10,000, prepaid insurance 13,000. Outstanding salary, that means salary has not paid. Prepaid insurance means already insurance has paid. Okay. Okay. This is asset. This is asset. This is liability. Liability. We need to see whether this asset as well as liability will be form part of net profit before tax. Okay. So that we need to see. Outstanding salary is liability. Prepaid insurance is already paid in advance. That is asset. So net profit before tax may not be form part of this thing. So what we have done is net profit before adjustment, we have taken it. Outstanding salary, all right, that we have reduced. Prepaid we have added. Hmm. So profit after adjustment is 1,83,000. So outstanding means we need to pay. Anyway, we have not paid. Need to pay but not paid. Need to pay but not paid. Okay, prepaid insurance is paid in advance. Okay, this is what it is. Can you go through this? Question number 21. Find out the corrected net profit. Profit before taking into adjustment 7 lakhs. 1 lakh spent on purchase of a motor car for business purpose. This is not a revenue expenditure. This is not a revenue expenditure. Treated as expenses in profit and loss. 15,000 rent per month rent outstanding for the month of February, March not taken into the account. This is also not taken into the account. So that we should take it into the account. So what we need to do is your profit could be added with 1 lakh, 8 lakh minus 30,000. So that is what we need to do. The answer could be, this is the answer. Okay, so how do we do that? So PBT, that is 7 lakh plus 1 lakh. This is not a revenue expenditure, so I am adding back 2 months rent not paid, so I am subtracting that. Then we will have an answer of 7,70,000. Okay. I'll be erasing this. So move on to next question. This go through that. So can you do the 22nd question? Okay.
Mute பண்ணி வச்சிருக்க.
Yes. So what is the question here? Sales is 11 lakh, 11,000. Gross profit is 1/10 of the cost. All right. So closing stock before this adjustment is 1 lakh. Closing stock after this adjustment, how much? All right. So that is what the question is. So gross profit is 1/10 of the cost. That means 1/11th of the sales. So gross profit is equal to 1,000. Cost is equal to sales minus gross profit. That is 10,000. Closing stock adjustment is 1 lakh minus 10,000. 10,000 is here. That is cost of goods sold that can be adjusted. So the closing stock after adjustment is 90,000. What is the concept? From closing stock, we have to reduce only cost of goods sold, not on the sales. So that is a concept which you have done it. Can you try this question? There was a stock of 5,500, out of which 500 was burnt due to fire and was disposed for 200. Remaining goods were sold at 25% above cost. Right. So there was a stock how much? 5,500. On the 5,500, we have a stock burnt worth of 500. That will give a cost as 5,000 stock. Remaining goods were sold 25% above the cost. So what is the sale price? Net profit is, sales is the 5,000 into 1.25, that is 6,250. Profit is
Sir, that 500 rupees goods வந்து 200க்கு வித்துட்டாங்கல்ல சார், burnt ஆனது.
அது பார்க்கலாம், அது தனியா பார்த்துக்கலாம்.
Okay.
Somebody is asking, shall we note previous one? Just give me time, I will just. So I will just note all. Okay. Okay, so the profit is 1,250, and we have 500 burnt. On that 500 burnt, we have recovered only 200. Loss is 300 rupees. That is loss. Okay. So this is basically 5,500 minus 500. I will take 5,000. Right. So sales is 1.25% on the profit, on the cost. So that is, I have taken it. Profit is this. All right. The 6,250 minus 5,000 will get 1,250, and 500 rupees worth of goods are burnt, recovered only 200, loss is 300. So my net profit, already I have a profit of 1,250 minus 300, that will give us 950 rupees. Okay, please copy this.
சார் ஒரு டவுட் சார்.
Yes, yes.
இப்போ ஆல்ரெடி 500 அதுல இருந்து மைனஸ் பண்ணிடுறோம் சார். அகைன் வந்து கீழேயும் வந்து 300 ஏன் சார் லெஸ் பண்றோம்? ஏன்னா அந்த குட்ஸ் 500 ருபீஸ்க்கான குட்ஸ் தான் நம்ம ஆல்ரெடி மைனஸ் பண்ணிட்டோம். ஸோ அது டோட்டல் லாஸ் மாதிரி தான். அதுல 200 நம்ம ஆட் தானே பண்ணணும். 1,250 அந்த 500 குட்டை வந்து நம்ம வந்து 200க்கு வித்துருக்கோம். ஸோ பிளஸ் 200. 1,250 ப்ராஃபிட் சார். ஒரு 500 லாஸ் ஆயிருக்கு.
Okay.
burnt ஆனது. அந்த லாஸ் ஆனதுல நம்ம 200 கெயின் பண்ணிக்கிட்டோம். ஸோ 1250 plus 200 தானே?
No, you just copy this. I will put it on a different format.
ஓகே.
I will redo that again, but you please copy this. Okay. Right. So I will redo that. So I just copy it. Or I will do one thing. I will just take noteboard. So this I will just do that. Now I have a goods. How much? 5,500. Okay. Okay. Show it back the problem. Okay. Okay. So I will do it here itself. Don't worry. So I have a stock of 5,500. Okay. In that, how much I have a lost? Loss is 300. Okay. So the balance stock 5,200. Okay. So or you can put it like this. 300 loss. So I have 5,200. So how the 5,200? I have a 5,000 plus 200. That will give us 5,200. This 5,000 I have a profit. That is 1.25%, 1.2 times. The 200 no profit. Huh? So okay.
6,450.
So 6,000
450.
6,450. Okay. So this is what is basically the calculation. Okay. Okay. Now I have a 5,000 goods which is worth of how much? 6,450. 6,250. One second. Somebody is asking questions, sir. How did you get 1.25? 1.25 is nothing but your 100. 1.25 is 25 percentage plus 1. That will give us 1.25.
Cost price 100 plus 25% profit.
Yeah. So your remaining goods were sold 25% on cost. Okay. So you have sold worth of how much? 6,250. Okay. So right. Now let's understand this. Here it looks that 200 rupees is your sold. Okay. Uh, that is what you have now. This is the total sales which has happened. Total sales which has happened is 6,240. Okay. Your total sales which has happened is 6,450. Right. Your effective goods sold, right, minus your profit is equal to, so you say sales, and profit is equal to 6,450 minus 5,500, that will give us 950 rupees. Getting it?
Yes, sir. Okay.
Okay, you can do either way. You can add back 200 and do this. All these things can be done. Whichever way you can understand, you can understand. These 200 rupees is whatever the balance portion of stock. This is a good stock. All right. And this is a stock which is burnt. This is a burnt stock. Okay. So this is what that calculation is all about it. Are you okay with that? Yes, no.
Okay, sir. Yes, sir.
Okay.
Thanks.
So any other doubt? No doubts. So can I erase this? Okay. So somebody wanted to know. Somebody asked some questions. I'll just check on the chat. Sir, how did you get 125? That's okay. That has been explained. Okay.
Sir,
Ah,
previous question, sir. Previous question.
which one? This one, huh?
22nd.
22nd. Ah. Okay. Can I do it again or how it is?
Sir, answer காட்டினா போதும் sir.
Answer katna poduma. Okay. So we'll move on. 25% on cost price is equal to 20% on sales price. So this is answer. Okay. Can you do this? Very simple question. Just try this. All right. So 79,000. Okay, let me check. Okay,
21,000.
21,000. Okay. So opening stock, purchase return. Purchase return should be reduced from the purchases. So your net purchases is equal to purchase minus purchase return. So that is how much? 71,000. Okay. Sales how much? No sales return. Huh? Sales is equal to 2 lakhs. Okay. Okay. So what is the gross profit? Opening stock plus net purchases. That is 1,21,000. So gross profit is equal to sales minus opening stock plus purchases. So gross profit is equal to 2 lakhs minus opening stock minus purchases how much? 1 lakh. Net purchases. That will give us 79,000. Okay, so the answer is 79,000. So okay. Hmm. Please copy this. Okay. So next questions we'll see. So that's it. Huh? Okay.
Sir, 24th question, sir.
24th question. Huh? 25% on cost is equal to 20% on sales. This is a question. You need an explanation on this?
Yes, sir, please.
So what I need to do is, assuming that sales is 100, right? Profit is 20%. That is 100 into 20%, that will give us 20 rupees. Your cost is equal to sales minus profit, that is 100 minus 20, that is 80 rupees. Okay, now profit on cost is equal to profit how much, 20, cost how much, 80, this into 100, that is give us 25%. So that's what they were saying, 20% on sales is equal to 25% on cost. Okay, clear on this?
Thank you, sir.
Thank you. Some question is there. Question number 24, at last first answer was right. Question number 24, yes. Okay, okay, okay. So all of you clear on this? Okay, so now we'll move on to foreign exchange.